Welcome back to the Successful Farming Podcast. In today's episode, commodity market expert Al Kluis and Bob Linneman discuss the recent volatility in grain markets, focusing on crop yield updates, the anticipation surrounding the upcoming USDA crop report, and the implication for corn and soybean prices. They explore market trends, price projections, and the importance of risk management strategies in the current agricultural landscape.
Good day, Al Kluis here with Bob Linneman, Kluis Commodity Advisors, with your November Successful Farming Podcast. Boy, we've had a lot of volatility in here lately, some amazing moves in both the grain and livestock markets, and we're here mainly today to talk about the grain markets. Bob, can you give me any crop yield updates? Where are you seeing problems? Where do you think we have that best corn in the U.S. and best soybeans? What are you hearing?
Yeah, so it's all over the map, Al, to be honest. And it started that way. Early harvest results, when we were in the 10 to 20% range as far as harvest completed. And you had a small handful of reports coming to the office that were amazing, were great. But the overwhelming majority, Al, at that time were disappointing was the theme behind that. And through the entire harvest, and here we are, the first week in November, it still remains that same theme. And that's for corn and for soybeans both. Guys that thought that they could have an actual chance at 70 bushel beans this year in the Northern Plains, they fell short. Mid 50s, upper 50s, and so a little bit better than last year. But that's it, and not anything that they were excited about. But again, there are a handful of places across the Midwest that had really good yields, so I'm not going to downplay that. You get into the Eastern Corn Belt, Al, some of those early yield results, it was dry, and the farmers all kind of concurred and agreed that hurt yields a lot more than what they had anticipated early on. So how the USDA is going to come together and put a number together, Al, it's going to be really interesting, because if you try to compare last year to this year, I would be in the boat that it's going to be hard to hold last year's yields, and whether the USDA actually gets us to that in November here, and we're going to talk about that in just a minute. But what does that January crop report say? And I think a lot of the trade is looking at last year's numbers being what we could see, and what does that do to the balance sheet?
That's a very good observations. I know there's some sweet spots. Eastern Iowa, Western Illinois, really good yields. Had some customers in Southern Wisconsin that had record yields. Certainly for a lot of our customers, the further they got into it, the more disappointed they were.
Yes. Yep. That was the theme that I got.
Want to mention too that on Friday, November 14th, is USDA crop report, much delayed, much anticipated report. And Bob, you and I, probably Nick, are going to team up and do a podcast that afternoon. I think will be available the next week. And so if you enjoy this today, you'll really enjoy what we see once we have the numbers from the USDA next week.
Yeah, and there's a lot of buzz around that report already, Al, with what will the USDA do? How will they play catch up? What data will they throw at us? What is it going to be? So as far as anticipation goes, this is going to have the same clout as maybe, the January final production report, or those June, planting intentions or planted acreage in the March planting intention. So there's going to be a lot of volatility around this report, a lot of hype around it. I think people are excited to actually see a USDA report, which is the way it should be. But yeah, it'll be interesting to see. You start looking at some of the yield numbers, Al. You throw a 186, 185, or 186 yield number into the corn. It still has ending stocks are strong. There's still a very strong number for the U.S. here. However, it's considerably lower than what it was, a couple months ago, in one of the last USDA reports we had. So same thing with beans. If you stay in that 53.5, 53 range for beans, that is still a good production number, but carryout is not getting much bigger. It just isn't. And I think the sub 300 million bushel number is what the trade is expecting there, and a lot of that's going to depend on how the USDA adjusts exports, given the recent news on what China says they're going to do. Now, granted, we haven't seen them do a lot, as far as action with those words, Al, but I guess we'll see what the USDA wants to throw in there. So, what Al, on the charts? What do you see right now? What in the corn? What are you seeing?
We've from the when you look at where we were in August when we had the really optimistic crop ratings, we were down at about 390 a bushel, and now we're pushing 440. So we've had about a 43-cent trading range so far this marketing year, and I always look at it during the marketing year. And so we're testing the top end of that trading range. If we get December corn to close above 437, and it's only a couple cents away, I can project corn up to about 450, 453. And so if you take the 390 low and you get a 60-cent rally in your first 2 months of the new marketing year, that's usually been a pretty good rally to sell. I talked to one of my customers, and he put some hedges out into the March corn at 449. He said, Al, last time I talked with you and told me to sell, and my calendar was last June. So it's been good. Soybeans, wow. I'm working on an article for the January Successful Farming article. And in 2024, the entire range for the marketing year for soybeans was $1.18 a bushel. Now, since this marketing year started on September 1, we've had a $1.25 range. And so, if you bought beans on October 1, man, you've made a lot of money. Trade is very skeptical about what China's going to do. And lately, and we haven't seen a lot of action in the cash market. 12 million metric tons, I think about it as being 440 million bushels. And so far, they've only bought about 18 or 20 million bushels. So they got a long ways to go. But somebody is buying a boatload of soybean futures. Now, are they going to say they're going to fill their commitments by buying 400 million bushels of futures and then take delivery later on? And right now, the tariff has made them a little bit more expensive. But when you look at Sino Grain or COFCO Grain, the two government-owned trade companies, they're just shifting money from one pocket to the other. When they're importing U.S. beans and paying the tariff, they just send the check over to another division of the government. So it's not a big deal. So I've been optimistic, but I want to be realistic. Right now, as a firm, we have people about 30% sold on corn. We've used this last rally on beans to get up 50%. We're back for many people with good yields in a profit zone. We've seen basis, especially at some of the processors in the central corn belt, go 15 to 20 under. I had a customer near Mankato, Minnesota, a couple of days ago, sold beans delivered in Mankato at $11 a bushel. With his 77 bushel yield, he's back where he's in the black. It looked pretty bleak in August, and just like it did in 2024. So it's been a nice rally. Seasonally, November has been a pretty good month the last couple of years to sell both corn and soybeans.
Yeah, what's your take on it's been floating around social media, and I know we've talked about it too, but the historical side of soybeans trading with an $11 handle. We don't spend much time on the front month contract, and again, we should reference the front month contract being kind of what people are looking at here when they say this, but what are your thoughts on that? I mean,
Well,
with
if you go to
today's
11, about 80% of the time, you're going to make a fast trip to 12.
right.
And you
Yep.
look at the November contract right now is running at resistance at 1120, March contract at 1140. Very next week, you have the November contract going off, and the March contract is going to be hopefully above 1140. All it does is take a week like we had last week. Last week, I think we put 58 cents on beans. You close this Friday at 1140. It's not hard to imagine beans going up. I don't ever go with even numbers, but boy, if we could get March or May futures up in that area of 1180, $12 a bushel, geez, all of a sudden, the red ink that was so prevalent in so many farms in August, a lot of that's gone. Now, that's not going to make everybody profitable, unfortunately. But for a lot of people that have really managed their costs or the ones that have gotten exceptionally good yields, we're back in the profit zone. And my rule is I'm in risk management. I want to get 50 or 60% of those beans sold once we're back in a profit zone. Remember how you felt in August, and look at where you are today.
That's right.
I'll be willing to take risk and hang on to that last 20 or 30% and really try working with you and using my charts to try to nail the top. As we get back in this profit zone, not a question of if you should sell. The question is how much you should sell.
Yeah, that's right. And we've had that conversation, and part of what we do daily, Al, is manage those cash sales, manage those, retain ownership ideas and such. And a big part of my conversations the last couple of weeks have been, is it too late to get in? This last week especially, is it too late to buy a bean call? and it kind of depends on what you think the USDA is going to say here this month and going forward. But the numbers do look friendly for what we're hearing in the trade. Now, what the USDA says to us, I mean, that could throw a wrench in it, or it could really accelerate to the upside, Al, and that could be something that we get on the November 14th report. But how do you think wheat? Wheat is trading, actually, we're 50 cents off the low in Chicago wheat. We're above, I think, all three key moving averages. I think we got above the 100-day here. What's your take on the
Uh,
wheat market?
I sell wheat usually the week of Thanksgiving, so I'm very happy to get this. First of all, I'll be honest, we had half of the wheat crop hedged. They had a really high, a really good profit levels, but I didn't ever forecast wheat to drop as low as it did. It's just been amazing, grinding bear market, the large global supplies. But I'm optimistic on here, but again, I want to be focused and disciplined on getting some wheat sold, another 20 to 30 cents up. We're going to take our cash wheat sales in the 2025 crop probably up to 70%. On new crop 2026 crop wheat, we're about 20 cents away from beginning to put some hedges on. When you look at the wheat market, don't just look at the December 25 and March 26 price. Go out and look at December 26 and see there's a big carry out there. And historically, when we've went out and put on a lot of new crop hedges and sold a 50-cent rally and a 60-cent carry, people really like those results at harvest. So in November, Bob, you work with a lot of large customers very carefully. What do you tell them to do? What are you telling your farm customers to do this month?
Yeah, so this month is maybe a little different than what we've dealt in the past for November's. November's are wrapping up harvest, kind of seeing where we ended up with final yields, what we had to sell because we produced too much, or hey, what do we need to do because we were a little shy on production. This year it's been a mix just because there's no data to go off of. When we have the data from the USDA, we can facilitate our plan and keep moving forward with our plan. But without that, it definitely changes things, Alan. And that's a conversation I've had a lot with clients is, well, what do we do if we don't have the numbers? Well, it's just like, well, we know what futures price are doing right now, and we need to protect based on, hey, we hope the market keeps going higher, but hope is not a great marketing strategy. So let's make sure we get an opportunity to protect a profit, that's what we're doing. And looking at things, looking at different ways to capture the carry. The carry's actually, sucked out a little bit, Al. We've lost some carry just with the bullishness in the market coming alive and those bull spreads kind of narrowing up a little bit. So if you sold the carry on certain things, okay, what do you do now? Do we think the carry is going to continue to get tighter? How do we manage that position? There's a lot of seasonal things, like you mentioned before with wheat, selling around Thanksgiving. There's quite a few seasonal trends where you buy soybeans in November and you hold until late, late December or early January. There's some of those trades, seasonal tendencies that come out there. So this year, I think headlines are going to drive more than anything, Al, and they have been so far, and I think that's going to continue. So my overwhelming, conversation is tended to be around headline risk right now. And how do we manage that? How do we protect it? And buy short-term options around reports, not just USDA reports. We were hedging around the President Trump and President Xi meeting. We were hedging around that because we were nervous what could happen. So I mean, it's just managing those headline risks right now. Al, seems to be at the top of the list for November.
I'm nervous about what the Supreme Court's going to say about Trump's tariffs. If they say they're illegal, it's going to cause chaos in both the stock and commodity markets, and so there's always a lot of risk. On a lighter note, I had an old-time reader for Successful Farming call in and says, "Oh, I did it again this year, Al. I bought soybeans during the World Series. It was scary, but it worked."
Yeah.
I had one of
Yep.
the guys I work with went back, and it did work about 80% of the time. So, I think what you said is very key. And if people don't understand that, we'll give them your toll-free number. But we're putting a lot of the hedges out into the March, and that we expect the basis to appreciate. So we're selling a rally. We're selling a carrying charge, waiting for the cash basis to improve. And that's called grain merchandising 101. And Bob, with your background, you do a really good job with that. So it's certainly a lot better situation than we had in August.
Yes, yep, for sure. And Al, I know we mentioned this just briefly before, but what are your honest thoughts about China has now said and told the world what they're going to do. as far as buying U.S. soybeans. Now we need to see the action, right? I mean, we need to see it actually unfold. And I think they bought a total, it was reported, and not through official government sources, but it was reported, private sources, 7 cargoes last week were bought through the U.S. Okay, that's great. Over the weekend, it was announced that they did 20 out of Brazil, for the over the next 6 months roughly, and they cited that prices were cheaper and such. So again, it's one of those things, like the market wants to see those sales, obviously through official reports, but even private reports at this point is going to kind of confirm that. How much time do we need to give them? How much time do you think traders are willing to, let this go and until they say, okay, hey, they haven't done anything yet. We're gonna take some profit off the table
Yeah,
here.
yeah. It's a dangerous situation, especially after a $1.25 rally. And I've always heard people say, "Watch what China does, not what they say." And so much of the conversation has been one way. It's just been the U.S. talking about they agreed to take 12 million metric tons. China hasn't confirmed that. And what
Right.
typically happens after these conferences is they put together a memorandum of understanding, MOU. That's not a contract. That's not a binding contract that you must buy it and you will buy it. History says China, a very shrewd trader. Remember, Bob, they've traded futures over there for 2,000 years.
Yeah.
We've traded them in the U.S. here for 200 years. So they're got deep pockets. They're very experienced. Ultimately, I think they're going to buy a lot of U.S. soybeans out of the Midwest. We had a very dry harvest, and their government is going to be buying them, not for crushing, because the crush margins are not that good, but they need to build a long-term strategic food reserve, and they like buying those soybeans out of the Midwest that are 8, 9, or 10%, because they can put those into the proper kind of bends with the right kind of ventilation and keep those for 5 to 7 years. And so to think they're going to do 440 million bushels by January was never realistic. Think about it during the course of a marketing year. And even 440 million bushels is less than what they had, half of what they did in 2022. So I think the number is a stretch. I think they're going to get partway there. But the individual firms, not the government-owned firms that are buying beans for processing, have been going to Brazil because they're cheaper. And some of that's because of the U.S. dollars back over 100. So I don't
Hmm.
want to be evasive, but when you have the dollar trading up over 100, when you've got U.S. soybeans trading at a premium to Brazil, when you have the outlook for pretty good weather and crop development in Brazil and Argentina, at least this far, it's early in the
Yep.
marketing year,
Yep.
you have to really be, I think, on top of your game. And again, if you look at last several years, May has usually been about the best month to sell beans, and a close second has been November. And here we are in November, and we're a good $1.25 off the bottom in the futures market. With the basis appreciation, a lot of guys are getting a cash bid that's $1.50 higher than what they had in early September. So just be disciplined and make sales.
Yep, yep, if you really are feeling like you just don't want to miss out on the market just going crazy, take that cash, put it in the bank, and there are options. You can buy, risk, know what you have out there for risk as far as watching this market go up and down, and the headline risk, Al, I think is here to stay for a while. I think that it really, we could see one bullish thing one day and a bearish thing a day and a half later, and this market, the volatility is probably going to crank up here, and we just need to be prepared for that. And at these prices, it's a lot easier than it was 2 months ago. That's
Right,
for,
right.
that's a definite thing there. But, um, I guess some of your final thoughts, Al, as we get ready to wrap this up.
Just like I might be repeating myself, but stay disciplined. Focus on what the revenue per acre that works for your farm. And when you get there, don't sell the whole thing, but be incremental. With the increase in volatility you talked about, Bob, I really encourage people to have offers in above the market. They might seem like long ways away. Some of those that we put in, a few weeks ago seemed like a moonshot. People called in and asked me if I was serious. So stay disciplined, make incremental sales. Bob, enough about the markets. Tell me, what do you do? You've worked for me, what now, 10 years?
But even a little more than that, even it might be
Oh, it
even
just
12,
seems
Al.
longer, right?
Yeah, yeah.
But you wear a couple of hats. We've got two different companies, Kluis Commodity Publishing. What do you do with them?
So for the publishing arm, I do a lot of the writing. Now that you and I are teamed up at that, and Cole for the AM updates that are emailed to our subscribers in the morning before 6 a.m. And we discuss a little bit of what happened the day before, a little bit what we're thinking that day or the next day or two, and we always include a chart, and it's not just ag related. We watch the outside markets and whatever is kind of making the markets move, we're going to try to discuss it and give you a little bit of insight as to what that is. And a lot of our readers really appreciate it just because it's a quick read. It's not 3 pages long. It's just a very quick synopsis of what happened yesterday, what we think today, and that chart work.
And
I love
what
seeing
you should
daily
do.
charts, Al. Yep. And then what you should do is, that's near the top. And if we have action alerts, it's like, boom, it's right there. And so that's one of my favorite things that I do. We do the weekend report as well, Al, and then which is very comprehensive. I think it goes into a lot of detail of what we did that week and what we expect for the next week. And again, the chart analysis there, I guess that's one of my favorite parts is running through the charts. And then as far as, we get together and we do any of the webinars, anything that where we get together, it's a publishing side of things. It's we also do the education arm, Al, which is, the academy. So a lot of getting into more than just trading the grains. We get a lot deeper into it.
Yeah. No, you've been great to work with. A money management background. Your dad farms in the area. Your brother farms in the area. You're in Watertown, South Dakota, but yet you're really well connected all the way through. So if people would want to talk with you, if they have any questions, certainly if they would like to participate in our webinar that we're doing for Kluis Commodities, 10:45 on November 14th. What is your toll-free number?
Yeah, it's 888-282-6141.
Okay. And I've got a group of young brokers that work for me. I really have been trying to train them in as I have no plans to retire. That rumors around every once in a while of some competitors that throw it out. But in all honesty, I learn a lot working with people like Bob and the other team of people, Nick, Mark, Cole, Brian. We have a great group that we work together as the team, but ultimately I'm the one who has to make the decision whether it's right or wrong. I'm in Wayzata, Minnesota. My family farms in southwest Minnesota. And if you would like to chat with me, you can give me a call toll free, 888-345-2855. And again, I think November 14th is going to be a huge day. We're going to be doing a podcast that afternoon. I'm already looking forward to it, Bob, because that's going to be a really, I think, an incredible day for a swing in prices and profitability. Again, thanks to Successful Farming, Jordan and his team. I really enjoy doing these podcasts, and we hope you like them. And if you have questions, please give us a call.
Yep. Thanks, guys.
Thank you to our hosts today, Bob Linneman and Al Kluis, for sharing. Thank you to our hosts today, Al Kluis and Bob Linneman, for sharing your expertise on the commodity market. For more stories like this, please visit agriculture.com and make sure to like, subscribe, and leave us a comment. You can also follow Successful Farming on Facebook, Instagram, and Threads, and be sure to check out our other podcasts, 15 Minutes with a Farmer and Successful Farming Daily, wherever you get your podcasts.